All right, today we're diving into the latest earnings report from a company that's, well, at the heart of the global economy, ADP. Looking at their numbers is like getting a real-time pulse check on the world of work. So we're going to go under the hood and see exactly what's making this giant tick. So here's the big question we're exploring. You've got this 76-year-old company, a true veteran in the game. In a world being completely reshaped by AI and nonstop change, how do they not just keep up, but actually stay on top? That's what we're here to figure out.
Let's just start with the headline number, shall we? Wow. For its second quarter, ADP brought in a staggering $5.36 billion in revenue. Now, that's a massive number by itself, but the really important part? It completely sailed past what Wall Street was expecting.
And that brings us right to our first section. I mean, this was a really strong quarter for them, pretty much all around. The big story here is solid growth, and crucially, beating the forecasts.
Okay, so let's break this down a little. We already mentioned the revenue number, right? $5.36 billion, which beat the estimate. But look at the bottom line. Their adjusted earnings per share, or EPS, that hit $2.62, also clearing the bar. It's a clean sweep, a beat on both the top and bottom lines, and that is exactly what investors love to see. And you know, we're not just talking about squeaking by either. This paints a picture of some genuinely healthy growth. Revenue was up a solid 6% compared to last year, and their adjusted earnings per share, that jumped an incredible 11%. That tells you there's some serious momentum behind the business right now.
So, you gotta ask, where is all this growth actually coming from? Well, let's take a look inside the engine room for the quarter. It really comes down to three things: technology, a big push into AI, and some major wins around the globe.
And check out this quote from CEO Maria Black. This really gets to the heart of it. She's talking about their new big company platform called ADP Lyric. She says that over 70% of their new business is from new logos, which is just a fancy way of saying brand new customers. This is huge. It means they aren't just selling more to their existing clients, they are actively out there winning business from their competitors.
And you can see that tech momentum is firing on all cylinders. Their enterprise platform, Lyric, is crushing expectations. Their platform for mid-sized businesses is picking up steam. Plus, they've launched these new AI tools, ADP Assist, to help with really complex stuff. And as if that's not enough, they landed this enormous European bank with over 75,000 employees. So this isn't just one thing going right, it's a whole strategy paying off at once.
But you know, it wasn't a perfect report card. And now we've got to pivot to the one area that did show some weakness, creating what some people are calling the PEO Puzzle.
Okay, first things first. What on earth is a PEO? Well, it stands for Professional Employer Organization, and it's a huge part of ADP's business. Basically, a company can outsource its entire HR department to ADP. We're talking everything from payroll and benefits to making sure they're following all the rules.
And wow, this chart right here tells the whole story. The bar on the left, that's the PEO business, growing at just 3%. Now compare that to the bar on the right, the company's overall growth of 6%. The difference is pretty stark, right? This is that slowdown that really caught everyone's eye.
So what happened here? Well, the company pointed to two things. First, new sales for the PEO division were still good, but just a little bit shy of what they were hoping for. And second, hiring at their existing PEO clients just kind of cooled off a bit. You put those two things together, and it really put the brakes on that segment's growth.
So with this PEO puzzle on the table, what's ADP's next move? Well, that brings us to their strategy for the future and what they're doing to keep shareholders happy.
The company is essentially doubling down on its strengths. They laid out a really clear three-part game plan. First, keep leading the pack with the best tech. Second, lean into their decades of expertise in HR and outsourcing. And third, use their massive global scale as a weapon against the competition. That's the playbook.
And for anyone holding their stock, ADP sent two really powerful signals of confidence. Get this, despite that PEO slowdown, they actually raised their official forecast for the entire year. And then, for good measure, they announced a massive new $6 billion share buyback. That's a huge commitment to returning cash to investors.
Okay, let's wrap this all up. If you're going to remember just one thing from this whole report, what should it be? What's the big takeaway?
I think this little report card sums it up perfectly. The good? A really strong beat on revenue and earnings, all powered by some serious AI and tech momentum. The concern?
For sure, it's that slowdown in their huge PEO business, but the outlook? It's still incredibly positive, backed up by that raised guidance and that giant share buyback. And that leaves us with this final big picture question to chew on. We all know AI is going to fundamentally change the way we work. So the question is, are ADP's big bets on technology and their incredible global reach going to be enough to keep them on top for another 76 years? That is the multi-billion-dollar question this report really leaves us with.